Hey, what's up, guys? Good evening. How are you guys doing today? I am supposed to be live already. Can you guys hear me? Here I am. Don't be impatient. I should be live already, I think. Let me see. Live stream offline. Can you guys hear me? Or see me? Yes. So I am live actually. Even though I cannot see myself. Awesome. So welcome back. Welcome back to another live stream. What is wrong with my laptop? Hold on, guys. There you go. Welcome back to another live stream. What a roller coaster ride today, guys. Jesus Christ. Unbelievable trading session. I want to share with you guys some of the callouts that I provided to you guys today when it comes to technical levels of the SPY. Obviously, we are going to go over, I am going to go over a bunch of stocks. Please drop a comment down below and let me know what stocks you guys want me to go over. And I want to tell you guys as well about OPEX. Tomorrow we have monthly options expiration. That's a day when usually weird stuff happens, and tomorrow might not be the exception to the rule. So there you go, SPY and Tesla, AMD. So hello, Laureen, Mo Patterson, Greg Osieski, Leslie Williams. Leslie's always joining me for my live stream. So welcome back, bro. We have Stanley Ogumu, Kenneth Banks, Greg, I already mentioned Greg Oziski, GCR Outdoors, Andre, Lorin Ture, Emeline Velez, Stanley Ogumu, let me see, AMC Pittsburgh. Okay, we have so much to talk about today, guys. Okay, so a very tough day across the board for the markets. First of all, I want to make a summary before starting to go over the SPY and some stocks. Very tough day out there for the markets, guys. Red day across the board. The Russell 2000 went down 1.51%. The Nasdaq went down 0.96%. Dow Jones went down 0.75%. And the S&P 500, or the SPY, went down 0.85%. If we take a look at the sectors of the markets, guys, take a look. Also, red across the board. The worst performing sector by a long shot was consumer discretionary because of Tesla. Tesla got absolutely killed today. We were discussing about this, about Tesla yesterday on Discord, and I told you guys the earnings report was very mediocre, to say the least. And this is a stock that has a very expensive valuation and that is pretty much priced to perfection. So this decline was pretty much predictable. And even more in the midst of a very noticeable red day across the board. So the 11 sectors went down. And if you guys remember, I am going to pull up here a chart before going over the SPY. I have been warning you guys about what, if you remember? The 10-year treasury yield, guys. I have been warning you guys about this indicator since forever ago. And I have been telling you, if you guys recall, if the 10-year treasury yield keeps going higher, most of the stocks that you guys love trading are going to be under pressure. And surprise, surprise, take a look at this, guys. The 10-year treasury yield hit today a multi-year high. It almost hit 5%. It didn't actually hit 5%. It went up to 4.99%. So get this, guys. This is a level that we haven't seen in the case of the 10-year treasury yield since June of 2007. 2007. I told you, I don't know, like 3 weeks ago, I told you, if TNX happens to fill this next gap up to 4.67%, we are very likely to see lower prices across the board. And guess what happened today, guys? TNX burst above 4.67% and it hit a brand new multi-year high. So, regardless of the technical analysis that I am going to be doing over here today, regardless of regardless of the technical levels that I can point out here when it comes to the SPY or AMD or TESI or Eli Lilly, whatever it is, guys. If this indicator keeps going higher, we are going to see lower prices across the board. I have been kind of letting you guys know about TNX on Discord, in my Discord channel. So this is by far, guys, the most important indicator that you need to keep an eye on as of now. TNX or TLT, you guys know that these two indicators, in the case of TLT is actually an ETF, a 20-year treasury bond ETF. So you need to keep an eye on TNX. If it keeps going higher, and mostly these very elevated levels, the, let's say, likelihood of making more money with put options is higher relative to making money with call options. So this is something that you need to keep in mind. Today I closed 5-day trades. 4 of those trades were with put options, and I was able to show you some of the screenshots of the profits of the trades that I closed. So let me pull up here my Discord channel. I wanted to go over one specific, let's say, a point of the trading session that was extremely important, guys. Take a look at this. I told you guys at 2:13 p.m. I posted, the bulls need to hold 429.20, guys. Otherwise, this could turn ugly once again. Take a look at the time, guys. 2:13 p.m. Okay? And guess what happened? I pointed out this level specifically, 429.20 in the SPY. So let me pull up here the SPY once again, and let me show you. Let me show you guys a 1-day, 1-minute chart. Okay. So this is a 1-day, 1-minute chart of the SPY. Take a look at this, guys. The second the bulls lost 429.20 as support, take a look at the time. 4:28 p.m. The SPY collapsed. It collapsed. I was able to take this trade. So I didn't tell you straight up what put option I was buying or whatever. I didn't call out a specific trade, but I let you guys know what to do if a certain situation happened. If the bulls lose 429.20 as support, this could turn very ugly once again. And this is exactly what happened, guys. This support was broken to the downside, and right after that, the SPY dropped 0.64% before seeing some sort of dead cat bounce. I actually took this trade and I posted the profit that I made over here. This was the trade that I took. I ended up making over here $180. This was one of the trades that I called out today. So I'm mostly for the newies that maybe are joining our server recently. What I do over here, or the work that I am doing specifically in my channel, is pointing out important areas. And I usually, before the trading session opens, I always let you guys know about a pivot, and we work with the pivot. This morning, as before the trading session opened, and then I was highlighting the pivot. We were talking about 430.50. 430.50. So take a look. This was my pre-market commentary. And I told you guys today at 8:13 p.m. Let me see if I can see the comment here. Okay. When it comes to the numbers, this was at 8:13 a.m. The bulls need to close candles above 430.50 in order to engineer a turnaround Thursday. We're going to see exactly, we're going to reconcile, we can reconcile this information with the technical chart, with the price action. So the trading session opened, guys, and I told you immediately, 5 minutes after the trading session opened, 430.50 is very important here, guys. it's the pivot, okay? Breaking 430.50 is a short opportunity. Take a look at this. I posted this information at 9:35 a.m. So let's reconcile this with the technical chart. So 9:35 a.m. What is it at? There you go. Take a look. So they broke 430. Let me put it up again. It was 430.50. There you go. They break 430.50 to the downside at, look at here. There you go. They broke this support at 10:20 a.m. Immediately after that, what do you know, guys? The SPY dropped 0.45%. I think that I was able to take this trade that I told you guys. Let me see. I think that I didn't. I think that I forgot to notify you guys this trade. But again, we're going to be working with pivots, okay? And remember, when I say pivot, that implies that above the pivot, the bulls are in control, and that maybe call options are on the table. And if if the price action shows that the SPY is closing candles below the pivot, that implies that put options are on the table. We killed it today, guys. Very good job. We really killed it today. I think that maybe today I had my best trading session of the year. So I just wanted to share with you guys the work that we are doing, okay, in our server. And let's just keep it up, guys. Thank you, Elgin. Thank you. There you go. Alonso Eichelberg. Can you give us a little more details, such as entries and strikes, price when you give the levels and prices? That's what I don't want to do, actually, Alonso. I want to show you guys how to fish. And I don't want to be fishing for you guys. So I am pointing out very specific situations. And if you follow, if you understand what is going on, because the idea of the information that I am posting, guys, is letting you guys know how to interpret the price action. That is the main factor that let us make money in this business. Understanding a very basic concept, guys. Who is in control of the tape? If buyers are in control of the tape, I am not going to go against who is in control of the tape. So if I can recognize, taking a look at the price action, who is in control of the tape. So again, if buyers are in control of the tape, why do I have to go against who is in control of the tape? I am going to be buying calls. But if I see that sellers are gaining control, then I am more likely to buy puts rather than calls because sellers are in control. So this is very, most of us, day trade a lot, guys. When it comes to day trading or taking short-term trades, you just need to understand who is in control of the tape. That's 95%, or let's say that 95% of every successful trade implies that we can recognize who is in control of the tape. And we simply jump on board of whoever is in control of the tape once again. Okay, so let me go over. By the way, let me tell you guys, when it comes to the OPEX, to the options expiration day that we have tomorrow, this is a day in which we usually have a greater volatility than usual. And what you guys need to know that when it comes to options expiration, this is a day that occurs every third Friday of the month. And usually what happens over here is that the market makers move the markets in the opposite direction relative to the highest positioning into the third Friday of every month. Okay? So the markets have been falling off a cliff in the most recent trading sessions. We can make the case that maybe, and I need to double check on this later on today, because I need to check on the let's say unusual options alerts that I get. So I can make the case. Let me pull up here the 5-day, 5-minute chart. I want to explain this to you guys the best way that I can. Okay, so during the last trading sessions, the SPY has been going lower, right? That implies that more likely than not, we have more put options expiring tomorrow relative to call options. Okay? So if that were the case, that represents some sort of temptation for the market makers in order to push the markets higher in order to have most of the put options that could be potentially expiring in the money tomorrow to do it out of the money. Okay, remember that the business of the market makers is having the, let's say, the greatest amount of markets participants to be run as much of the time as possible, correct? So I'm thinking that since we have seen a very, let's say, negative action into tomorrow's monthly options expiration, I'm thinking that we might have more put options potentially expiring in the morning tomorrow relative to calls, and that could imply, again, as I just told you guys, that could represent a temptation for the market makers in order to push the tape higher. So in my opinion, I could be mistaken. This is not an official call out from me. We have a high likelihood in order to see a green day tomorrow. But remember, we have a potential war in the Middle East. The yields have been rising very aggressively. Maybe, I don't know, maybe the 10-year treasury yield bursts above 5% tomorrow. So that's a whole different story. So aside from the, let's say, macro stuff, the macro concerns that we have on the table, I would say that from a market maker's perspective, we might see a green day tomorrow, or at least, guys, we should see a green opening of the trading session tomorrow. So maybe the market's movers can, scare the hell out of the put options holder, and then maybe they can bring the SPY lower. We'll see what happens tomorrow, but don't worry. I am going to be very active on Discord tomorrow, per usual, calling bulls and strikes and letting you guys know what are the most important areas of interest. Okay, SPY, before I go over any specific stock. So today we had a very negative close, guys. Let me pull up here a 1 hour chart. So the bulls lost as support today, the 5-day moving average. They actually closed yesterday below the 5-day moving average. And yesterday they managed to hold as support the 20-day moving average into the closing bell. Today they closed the trading session below these two moving averages. And we have two potential areas of support that I am going to be keeping an eye on if we keep seeing further downside before seeing some sort of relief rally or a green day. Who knows? So the first main area that I am going to be keeping an eye on to the downside is going to be 425. $425 is a previous support back from October 2nd. If this support happens to be broken to the downside, guys, we have a big level for the bulls. That is going to be $422. $422. I am going to pull up here a 4 hour chart. Happens to coincide with this upward sloping 200-day moving average. Very important level. Sorry guys, I don't think that the bears are going to be able to take out or break these two supports without a good, let's say, a fight from the bulls. So these are two potential areas from which the tape could be bouncing back up tomorrow if we happen to see further downside before seeing some sort of relief rally. To the upside, the most important task that the bulls would need to accomplish over here would be recapturing 430. It looks a bit far away, taking into account that the SPY closed today at 426.43, $426.43. But when I say $430, let me be a bit more precise here. Let's say $429.80. I am talking about the 20-day moving average. So we can expect that in regular market conditions, the bulls should kind of dance the Macarena around this area, and we could see some sort of retracement, which could maybe represent a shared opportunity. So the SPY isn't looking good at all, but we still have over here an upward sloping 200-day moving average, guys. So this is going to be the very last line of defense for the bulls. And I also wanted to show you guys an anchored volume weighted average price. Let me see. So I have over here a chart of the SPY. And take a look at this, guys. So the bulls closed today below the anchored volume weighted average price that comes from the October low. That was, this low was hit back on October 3rd. So in case of a bounce, take a look at this area, guys, $429.50. At $429.50, we have the convergence, the coincidence of this anchored volume weighted average price that comes from the low from October 3rd, coinciding with none other than the 20-day moving average. So this is, in my opinion, in my humble opinion, this is going to be the main, the most important task in the short term for the bulls, being able to burst above and recapture $429.50 ish approximately. Okay, so let me see what requests do I have over here. Okay, let me see. So Eli Lilly, Leslie Williams. It has been going lower, I think, right? Let me pull up here Eli Lilly. I'm going to try to go over all of the stocks that you guys are letting me know in the description box of our live stream. Remember to hit the like button, guys. Go ahead, do me that favor. 58 likes. Come on, we can do it. 23 likes, so we need 30 more likes over here. Okay, let me pull up once again the live chat. Okay, so Eli Lilly, it goes down today 2.71%, and it closed the trading session at $590.80. So we have a, let's say, we have a negative aspect here for the bulls, which is the fact that the 5-day moving average is starting to go lower. So that's not a good symptom. Let's just put it that way. That's not a good aspect. That's not a good aspect for the bulls. Let me see what could be potentially happening over here. Wow, Lilly. Okay, so we have the 20-day moving average sitting at $568. So I would say that if Lilly keeps dropping, I might be a buyer, guys, near $570. $570 implies that we have the 20-day moving average coinciding with a previous resistance back from October 6th. So this would be a potential area from which Lilly could be bouncing back up. Another potential scenario would be, what about Lilly, guys, recapturing this former resistance back from mid-September at $600? So here's the deal, guys. For me, in order to buy the dip in any stock, I buy the dip, and I have been telling you guys about this concept on multiple occasions. I never buy the dip. I buy strength after the dip. So I would rather see buyers stepping in over here and bringing Lilly above this previous area of resistance, as I just told you guys, back from mid-September at around $600. So my trade in the case of Lilly would be seeing Lilly once again closing candles above $600. That would be this would be signaling that buyers are recapturing control of Lilly in minor time frames, because as of now we have seen sellers gaining control of Lilly in minor time frames because Lilly is trading as of now below the 5-day moving average. So I would rather see Lilly closing candles above $600. This would be very positive. Yeah, $600. Let's just round it up. On the flip side, if Lilly keeps going lower, yeah, I think that $570 would be an interesting spot. Take it into account that this is a previous resistance back from October 6th. And by the way, this is also a previous resistance back from September 21st. So you guys know the deal. Previous areas of resistance tend to act as support. Am I going to buy the dip on Lilly? Let's say that Lilly, drops further. Am I going to be a buyer right at $570? No way. Remember, don't buy the dip, buy strength after the dip. So if Lilly bounces back up from $570, I would be taking the trade. I would be entering the trade at around $573. From $573 up to, let's say, let me see over here. Yeah, we have over here a previous area of support at 590 bucks. This would represent a 3% profit trade. So these are the two scenarios in which I would be interested in taking this trade. On Lily, this is still a very good looking chart. We have an upward sloping 200-day moving average, upward sloping 100-day moving average. So this is a stock that should be on every watch list because Lily, in my opinion, can keep going higher. Let me pull up here the market structure of Lily. And let me take a look. By the way, guys, let me take a look here at the anchored volume weighted average price from the most recent all-time high of Lily, guys. So let me see over here. So the high was, there you go. So here comes a high. Now this AV web is signaling depth. Take a look, 600 bucks. How about this? You see, if we draw an anchored volume weighted average price from the all-time high of Lily, what price do we get? 600 bucks. Very important spot. So it would be very, very positive for the bulls to be able to consolidate above $600. Okay, let me take a look at the market structure of Lily. So supply and demand. Oh, let me see. It logged me out. Okay. We have a very positive market structure. Remember, guys, on top of this chart, you guys can see the demand. At the bottom, you see the supply or sellers, so demand buyers, supply sellers. We have a rise in demand that is above the supply. So I'm thinking that a drop down to 570 bucks could be a buy the dip opportunity. Or in my case, I would rather see in Lily above 600 bucks before pulling the plug over here. There you go. So what other request do I have over here? Let me see. We already went over the SPY Tesi, guys. What a disaster, huh? What a disaster. Tesi, it went down today 10% and it closed the trading session at $220.11. So this is a very ugly looking chart. And mind you, guys, because I guess that most of you guys want to buy the dip over here. This is the stock of a company that has an important, let's put it that way, institutional participation. So when you guys see the stock of any company that has an important institutional participation, usually a negative reaction takes up to 2 trading sessions in order to unfold. Do you guys see what I'm saying? So institutions, usually when we have a bad earnings report, which was the case of Tesla for the most part, they have to make a lot of telephone calls. They need to call investors. Hey, what do you think about this report? Or we think that maybe, this company can turn this negative situation around and stuff like that. So that process usually takes up to 2 or 3 trading sessions. So I'm thinking that the downwards pressure that we are seeing in Tesla might last for, let's say, 2 or 3 more. Let's say 2 more trading sessions. Let's just put it the way. That doesn't imply that we aren't going to see some sort of, oversold, quote unquote, oversold relief rally. You guys know that I don't like the concept of oversold and overbought. That's bullshit. So we have a very important spot coming up for the bulls of Tesla. Take a look, or that could be visited. Let's just put it that way. Sooner rather than later, or maybe tomorrow, for the bulls of Tesla. Take a look, 213 bucks, guys. Why is the spot so important? Well, because at 213 bucks, we have the coincidence of an upward sloping 200-day moving average with a previous support back from August 18. And on top of that, this is also a previous resistance from late February. Very important spot for the bulls over here, guys, at around 213 bucks. Okay, so I think that if this spot happens to be visited in an aggressive fashion, let's say tomorrow, we could be seeing, or the likelihood in order to see Tesla bouncing back up from this spot is very high. Or let's say that the likelihood for a decent dead cat bounce to unfold from this area is very high, $213. You guys know that I don't like the relative strength index. This is the technical indicator that I hate the most. A lot of people are going to be saying tomorrow, or must be thinking as of now, that Tesla is quote unquote very oversold. Remember, guys, and I am telling you guys this because of my own experience. I have seen 1 million very oversold stocks keep going lower. So be careful about that. But we can make the case that a lot of people are going to be trying to play this bounce because Tesla is supposedly very oversold. We can see the RSI of Tesla on the 4-hour chart sitting at 14 points. So this is a very important spot for Tesla tomorrow, $213 if it keeps going lower. On the flip side, because Tesla closed the trend session today at $220. So if we happen to see Tesla opening in the green tomorrow, keep an eye on $220. I am going to draw a line over here, and I am going to zoom in. So take a look at this, guys. $220 happens to be both a previous support back from early June and also a previous resistance back from early June. So if you guys happen to see Tesla, and you guys know that Tesla pretty much is going to follow whatever the markets do as a whole, the Qs, the SPY, the NASDAQ 100, the S&P 500. So if tomorrow we happen to see a relief rally in the SPY and the Qs, and if you guys happen to see Tesla closing candles above $221, this could be signaling that the bulls are gathering momentum in order to maybe being able to fill the next gap from $220, or let's say that we have a gap from $220 approximately up to $228. This is a previous support back from mid-August. So these are the levels that I am going to be keeping an eye on Tesla tomorrow. Let me pull up here. Let me see if I have any anchored volume weighted average price that is worth to be pointed out in the case of Tesla. Let me see. Alrighty. So this is, okay, let me see. Okay. Take a look at this anchored volume weighted average price, guys. Let's say that Tesla breaks $213 to the downside. This white line that you guys can see over here is an anchored volume weighted average price that comes from the January low. Okay? And this AVWAP is signaling $206. So let's say that Tesla breaks this upward sloping 200-day moving average to the downside, $213. I don't think that Tesla can drop lower than $206 without at least seeing some sort of relief rally. So to the downside, and if Tesla keeps getting killed, which could be the case, I wouldn't rule out that possibility. $212, and most importantly, $206. This anchored volume weighted average price that comes from the January low are areas in which I might be thinking about playing the bounce on Tesla. By the way, let me see if I have any significant or meaningful change in the market structure of Tesla, guys. So supply and demand. And take a look, guys. This market structure doesn't look good at all. You guys can see that the demand, which is on the top of this chart, is dropping, and the supplier sellers is rising. So I think that Tesla has an appointment with lower prices, and I might be interested in playing the bounce from the two areas that I just told you guys about. Okay, AMD, Greg. Let me take a look at AMD. By the way, guys, I think that NVDA was upgraded today. Despite the fact that the markets fell off a cliff, it really caught my eye, guys. Before going over AMD, I am going to take a look at NVIDIA. It really caught my eye the fact that NVIDIA only went down today 0.23%, guys. On a day in which the SPY alone went down almost 1%. This is interesting. The chart of NVIDIA isn't looking constructive, let's just put it that way, because it is trading below the 100-day moving average and the 5-day moving average. But this spot, guys, at around 120 bucks is a very interesting spot in the case of NVIDIA, guys. This is a previous support back from mid-August. This is also a previous support back from early July. And this is also a previous resistance back from late May. So, and I guess that any of you is going to ask me about NVIDIA. Keep an eye on 420, guys, because on a day, again, in which the markets got killed. And I think that the SMH went down today, right? The semiconductor ETF. Oh, yeah. 0.68%. In a day, you guys know what happened today, guys. We had a very nasty day in the markets. But NVIDIA holding 420 is an interesting stock, in my opinion. Okay, AMD. Let me take a look. Did AMD go up or down today? And take a look, guys. This is another stock that shows relative strength. So AMD, in the midst of a bloodbath, when it comes to the markets as a whole, was able to pull up a green day. It went up 0.23% and it closed the trading session at $102.40. So a very choppy chart over here. I have been telling you guys, this is a stock that we always go over on my live streams. And I have been telling you guys over and over and over again about this upward sloping 100-day moving average. And this moving average has turned into a nightmare for the bulls of AMD because they have failed right at it on 1, 2, 3, 4, and 5 occasions. This is a nightmare, guys. And this is a major moving average, the 100-day moving average. So as of now, we can make the case that the AMD showed some sort of relative strength today because it went down in the midst of a bloodbath in the markets. But over here, we have a downward sloping 5-day moving average, which happens to be this white line that you guys can see over here. Remember, guys, I use the 5-day moving average, the 5DMA, or the 5-daily SMA, in order to determine who is in charge of minor time frames. So I can actually see that AMD is selling off after hours, right? Let me see. No, I mean it was able to pull up a green day today, but to pull off a green day, but it ended up selling off for most of the trading session today. So, you know, some sort of relative strength. Let's just put it that way. So a no touch, guys, below this downward sloping 5-day moving average. I would be interested in taking a trade on AMD if I happen to see AMD closing candles above, once again, this downward sloping 5-day moving average. This would kind of put the buyers once again in control of AMD in minor time frames. So I would like to see AMD closing candles above 104 bucks before starting a trade over here. If the bulls can close candles above 104, let's just round it up. Let's say 105 bucks. This could be signaling that the bulls are gathering momentum in order to maybe being able to fill two gaps to the upside. The first one up to 108 bucks. 108 bucks is a previous resistance back from early October. And obviously the second gap to the upside is none other than the nightmare of the bulls of AMD, this upward sloping 100-day moving average near 110 bucks. So a no touch below 105, let's say. And mind you guys, this could also represent a short opportunity. What happens if you guys see tomorrow AMD failing at trying to burst above 105 bucks? This could be a short opportunity. If the bulls fail at trying to burst above this area, we could be seeing AMD dropping down to 100 bucks. At 100 bucks, we can see the base of this breakout candle to the upside. So this might be an area in which AMD could be finding support that in case of a further drop. So these are the two scenarios that I can tell you guys about AMD. Let me pull up here advanced micro devices. Let me see what is the supply and the demand looking like, and take a look, guys. We can reconcile this market structure with the fact that we are seeing as of now a downward sloping 5-day moving average. Remember, on top of this chart, you guys can see the demand, and at the bottom you see the supply or sellers. So we have a decreasing or falling demand, and we have a rising supply. What does this imply in simple terms? That buyers are walking away from AMD and that sellers are stepping in. So definitely a no touch below, in order to go long, guys, below $105 for good old AMD. Phenomenal work. Thank you, guys. Thank you. Okay, let me see what other requests do I have over here. Let me see. Amazon. This is another stock that is struggling. I took a look at this chart this morning. Take a look at this, guys, because you know that I use a lot both the 100-day moving average and the 200-day moving average. Again, the 100-day moving average is this blue line that you guys can see over here, and the 200 is this red line, kind of red line that you guys can see below this blue line. So take a look at Amazon, guys. Take a look at the way that the bulls of Amazon are struggling precisely with what? Look, the 100-day moving average. So they have failed at bursting above the 100-day moving average on 1, 2, 3, 4, and 5 occasions in, let's say, I don't know, in the last few weeks. Let's just put it that way. So this is a very important area of supply, obviously, or a very important of overhead, a very important area of overhead resistance, a very important area of supply. So we have a downward sloping 5-day moving average. This is not a good. This isn't positive for the bulls. So ideally, guys, the trade in the case of Amazon to the upside would be seeing the bulls being able to close candles above this, again, upward sloping 100-day moving average. So I would be interested in taking a trade on Amazon if I can see the bulls closing candles above $131.50. This could be signaling that they are gathering momentum in order to fill this next gap up to $134. $134 is a previous resistance back from October 12th. So that is a trade that I would be interested in the case of Amazon. And another very choppy chart, but we can make the case that we are still seeing over here an upward sloping 200-day moving average. But again, guys, in minor time frames, the sellers are gaining control. Most definitely. Let me take a look at the market structure of of Amazon. So supply and demand over here. And we are 42 minutes in. There you go. Okay, nice live so far. And take a look, guys. The market structure looks interesting, looks positive. Why? Because we have a rise in demand. We can also see a rise in supply, but the demand is above the supply. So as of now, from a demand and supply standpoint, we have more buyers than sellers in the case of Amazon. So I'm thinking that above the 100-day moving average, this is a trade that I would be very interested in. Above $131.50. Again, in regular market conditions, guys. Remember, we have yields rising. We have a war in the Middle East, and you guys know the drill. So this is the trade that I would be taking in the case of Amazon. So let me see over here. I've been floating between the 5-minute and the 2-minute. I'll consider that and see I do better. Thank you, says Darren Hilton. Guys, I told you last week when it comes to my technical analysis, like on a daily basis, I use the 4-hour chart. I use the 4-hour chart and I use the 1-year chart or the daily. These are my two favorite charts in order to determine areas of interest from a support or resistance standpoint. Okay, so for the most part, before the trading session opens, when my day kicks off, I use the 4-hour chart in order to determine areas of support and resistance. If I don't find any, let's say, important areas of support and resistance on the 4 hour, I go to the daily. So that's what I do. But mind you, when it comes to starting my trades and when it comes to monitoring the SPY, I use the 1 day, 1 minute chart. By the way, guys, let me show you my grid. This is the grid that I use on a daily basis. And this is the grid that I share with the members of my Patreon. And over here, I use the 1 day, 1 minute chart. So when it comes to starting a trade, I use the 1 day, 1 minute chart always. Always. Okay? And so far, so good. I can't complain about the 1 day, 1 minute chart, but at the end, guys, it all depends on your style. So whatever works out the best for you guys, just stick to that, okay? Okay, where do you find the supply and demand information? This is a website, guys. You guys need to pay for that if you want to subscribe. Let me show you. The name of this website is Market Structure Edge. Here, let me move my screen. Here you guys can see it, Market Structure Edge. And I use it always, guys, in order to confirm that the stock that I am, that any given stock that I am thinking about taking a trade with has a market structure that is compatible with the trade that I want to start. Okay, what other requests do I have over here, guys? Let me know. Let me see. Okay. This space between my Netflix. Thanks for your help, Alvaro. Will you analyze XOM and Netflix? Yeah, sure. I took a blockbuster trade yesterday on Netflix, guys. I got 500 shares before the report came out, and I ended up making $600 over there. That was the best trade of the week, I think. It's going to, unless I do something crazy tomorrow, it's going to be the best trade of the week. So Netflix goes up today 16%. It closed the trading session at $401. Guys, it really caught my eye. The fact that, again, we had a terrible day across the board today, and the Netflix rip didn't get sold, guys. So this is let's say this is proof that buyers bought Netflix with a lot of conviction, guys, because the markets were falling off a cliff today, and Netflix managed to hold the gains from yesterday. So I mean, this is unbelievable. This stock went up today 16%. Amazing day for Netflix. This is an easy one, guys. So if I wanted to go long Netflix, I would need to see a bit more of consolidation above $400. Holding $400 as support, we have the 100-day moving average pretty much coming up for the bulls of Netflix at $416. And by the way, this upward sloping 100-day moving average near $415 happens to coincide with a previous support back from July 28th. And this is also a previous resistance back from early June. By the way, I'm curious, where are the buyers of Netflix at from its second to last earnings report? I'm curious. Let me see if I have that anchored volume weighted average price over here. Yes, I have it. Take a look, guys. So the buyers from Netflix second to last earnings report are, as of now, trapped at $412. And we have the 100-day moving average at $413. Can you guys see the importance of an anchored volume weighted average price, guys? An anchored volume weighted average price, guys, shows us the average price of the market participants from a specific date. Take a look at this. So this is a big level of supply for Netflix, guys. $413. I think that price is coming up for Netflix more likely than not. And figure this, guys. So most of these market participants were averaging down on their Netflix positions, and they were, I mean, yesterday they were holding a big bag over here, guys. They had an average price of $413, whereas Netflix was trading at $345. That hurts, you know? So, correct. What do you think these guys are going to do, guys? The second Netflix hits $413. Mm-hmm. What do you think they are going to do? They are going to sell out of Netflix. Straight up, guys. Because it hurts having a losing position. It hurts, guys, having shares of any stock at $413 and seeing that stock at $344. So this is a big level of supply for Netflix, guys. This anchored volume weighted average price that comes from its second to last earnings report, and that on top of that coincides with this upward sloping 100-day moving average. This could be a very an easily identifiable spot in order to short Netflix. Mm-hmm. Oh yeah, absolutely. Okay, I guess that if I take a look at the supply and the demand of Netflix, it's gotta be the supply should be starting to rise, guys. I took a look at the market structure of Netflix yesterday, and the demand was falling. Let me see now. It is still falling. I guess that this information has to be updated, and the supply and the demand must be rising, I guess. So there you go. 400. We are getting Netflix puts at $415, $413 approximately. Okay. Alrighty. Very good earnings report, by the way. Very good earnings report from Netflix, guys. Very good report. I took a deep look at it. I actually posted a video yesterday in Spanish on my YouTube channel, and wow, I mean, this company is doing things the right way, guys, in a business in which all of the competitors of Netflix are burning money left and right. Okay, Avigo. Okay, that's Broadcom, right? Let me see. Avigo. There you go. Broadcom. There you go. So it went down today 2.16%. Why? Why did a semiconductor stock go down in a day in which both NVDA and AMD went up? And of course, you guys know that both AMD and NVIDIA are also semiconductor stocks. So this is not a good sign for Broadcom, right? When it comes to major time frames, we have an upward sloping 200-day moving average, an upward sloping 100-day moving average, and the bulls closed today's trading session below the 5-day moving average. So Broadcom closed today's trading session at $867.83, and it went down 2.16%. So let me zoom in here. This is an easy one, guys. You guys know that I love the 5-day moving average. So if tomorrow, and again in regular market conditions, you know, you guys know the deal without the indices falling apart. If I see Broadcom, and let me draw a line over here. There you go. If I see Broadcom closing candles above this 5-day moving average, if I happen to see the bulls recapturing this 5-day moving average and closing candles above it, so let's say $886. So closing candles above $886, and you guys know that this is a very volatile stock. Oh my God, I have traded Broadcom on 2 or 3 occasions. This is the stock of this company is not for the faint of heart, guys. So closing candles above $888. There is room up to $906. $906 is a previous resistance back from late August, and this is also a previous resistance back from mid-July. So this would be the trade in which I would be interested in. And mind you guys, there's another trade. If Broadcom keeps dropping, we can see over here, we can notice an upward sloping 100-day moving average. Guys, remember, guys, that the slope of a moving average matters, and matters a lot. If you guys see a moving average upward sloping and it is visited in order to act as support. So if it is visited, let's say from north to south, it is very likely, that moving average is very likely to be able to act as support because it is upward sloping, okay? It favors the bulls, it favors the buyers. So, and take a look at this blue line. This is the 100-day moving average. It is signaling $859. If the bulls can find support tomorrow at $858, and if they bounce back up, this could be a trade as well, guys, on not buying the dip, buying strength after the dip. So I would be starting this trade at 800, let's say 861 bucks, from 861 bucks up to the 5-day moving average at 886 bucks. Wow, this would be a blockbuster trade, guys. This trade would represent a 2.70% profit trade. So this is another stock that I am going to keep an eye on tomorrow. Let me take a look at the market structure of Avigo. Broadcom. Let me see. We are 56 minutes in. Alrighty. Let me see over here. Wow. Take a look at the market structure, guys. The demand or buyers through the roof, and the demand is way above the supply, and the supply is kind of flat. So I'm thinking that the stock of this company has an appointment with higher prices, guys, either consolidating above $885 or maybe finding support near $860 approximately. There you go. XOM or anything oil related. Yeah, oil has been going higher, guys. This is another concern for the markets as a whole. And you guys also, I mean, most of you guys know that you need to keep an eye on the Dixie, right? The US dollar as well. So XOM went up today 0.06% and it closed the trading session at $113. So, yeah, and oil went up today, right? Yeah, it went up 2.16%, 17%. Wow, what a choppy chart over here. The bulls are trading above the 5-day moving average, which happens to be upward sloping. They are also trading above the 200-day moving average, the 100-day moving average. I would say, guys, I would rather see XOM or Exxon kind of breaking out from this area of resistance at $113.50. And by the way, $113.50 is also a previous support back from early September. This would be the trade that I would be interested in. And this is a chart that is starting to look interesting. So by bursting above $113.50, the bulls would be consolidating above all the moving averages. That's bullish behavior. No doubt about it, guys. So let's say that we pick up some shares or, I don't know, collapses of XOM above $113.50. If that were the case, the bulls could be gathering momentum in order to fill this next gap up to a previous area of resistance at $117.20. This is a previous area of resistance back from April. If we were able to take this trade the way that I am describing it over here, guys. So I'm starting a trade at $113.90, 114 bucks, up to this previous resistance at 117 bucks. This could represent a 3% profit trade. So would I go long Exxon? Yes, I would go long Exxon, but consolidating above 114 bucks. And obviously, guys, and remember, you cannot trade any oil-related stocks with oil going lower. Okay, so you need to keep an eye on both the Dixie, the U.S. dollar. You guys know that the U.S. dollar is inversely correlated to oil and to commodities in general terms. So the Dixie going lower, oil going higher, and Exxon consolidating above $113.50. I am interested. I would be interested in this trade. There you go. Darren Hilton says Dixie. Correct. TSM. Before I think I wrap it up, 1 hour. We are wow. We are 1 hour in, guys. Okay, TSM. Okay. They posted earnings today, guys, and check this out, guys. Let me see if I can see what the CEO stated. You know that this company manufactures the AI chips of NVDA. You guys know that, right? And take a look at the comment that the CEO made, guys. Okay, take a look at this, guys. So this is the company, again, that manufactures most of the NVIDIA's AI chips. So the CEO says today that AI demand, or the demand for AI-related chips, is not enough to offset cyclicality. What is the CEO of TSM talking about, guys? Okay. TSM went up today 3.69%, and obviously, the report, in general terms, I took a look at the EPS and revenue and stuff like that. It was very decent. It was a good report. So this is the reason why this is the second most important stock inside the semiconductor ETF. Okay, Taiwan Semiconductor. So this is the reason why we saw some sort of relative strength in the semiconductor industry today, relative to the markets as a whole. So TSM went up today 3.69%, and it closed the trading session at $92.91. So, and you guys know that I love the 100-day moving average. I would rather seen TSM, guys, bursting above $95.50 before going long. This would be very bullish if Taiwan Semiconductor can burst above and consolidate above this upward sloping 100-day moving average that is signaling $95.50. This would be very bullish, because if that were the case, TSM would be trading above all the main moving averages. So consolidating above $95.50, there is a gap up to $98, which is a previous resistance back from August 23rd. So this would be the trade that I would be interested in. We have the 200-day moving average at $91.98. This could also be a possibility, guys. The 200-day moving average is even more important than the 100. So maybe consolidating above $92, there's room up to $95.38. But I love trading stocks above all the moving averages, guys. Those are the trades that I feel more comfortable about, above all the moving averages, with the buyers in total control of the stocks. Dixie and TNX goes up and the markets goes down. They are inversely correlated. For the most part. Yeah, correct. There is a situation I was telling you guys. If the markets feel that a recession is going to kick off, in that situation, we are going to see TNX going lower along with the markets. Okay, because the 10-year Treasury yield is going to be going lower, signaling or sending a message to the Fed that they are going to have to cut rates in order to prevent a recession from being a, depression. But for the time being, guys, yeah, that's a correlation. Dixie goes up with TNX, the markets are going lower, okay? But there is going to be a moment, if we happen to actually see a recession here in the US, in which TNX is going to go lower and the indices will follow, okay? And the Dixie will also go lower, guys, because the markets are going to be expecting the Fed to cut rates ahead of a recession or in the midst of a recession. But if that is the case, guys, the markets are going to have to reprice assets. Let's just put it that way, because if we go into a recession, that is obviously going to affect in a negative way corporate earnings, the revenue of most of the companies out there and so forth, okay? Let me take a sip of Sprite, guys. But mind you, guys, if we happen to see a meaningful change in the mechanical aspects of the market, I will be letting you guys know about it, okay? No worries. If we try trading tomorrow, would buying options with next week expiration date be a better idea? That's not a question for me, Darren, because I don't trade short dated options. If you guys take a look at the options that I buy, I am always buying 1 month out, 2 months out. So I wouldn't advise anyone to trade options that expire next week. That implies that you need to have a super tight stop loss, and that's not my style. So tomorrow for sure, guys. Okay, so you can be 100% certain that we're going to have a very volatile trading session, and for the most part, and regardless of the options you trade, either calls or puts, you just need to be mindful of the. You just need to be mindful about who is in control of the technical charts. And I'm going to be letting you guys know who is in control of the technical charts. Okay, on Discord. Okay, guys, we are an hour and 5 minutes in. I'm super tired. I'm gonna go grab a beer. Today was my best trading session of the year. So I think that I am going to celebrate today. So thank you for watching. Thank you for listening. And if you don't mind doing it, I am asking you guys this favor. Your comments, okay, don't transcend into the comments of the video, because as of now I am streaming exclusively for Chris Saints community, okay? But once I am done streaming, I am going to release this stream on my YouTube channel. So if you don't mind going to my YouTube channel, I don't know, in a few minutes, 10, 15 minutes, and drop a comment, hey Alvaro, thank you very much, whatever. Keep up the hard work. That's a way that I think that I am going to be extremely thankful to you guys, okay? Thank you, guys. Can't wait for my best trade day. We'll let you know. Awesome, Joshua. Awesome. Thank you very much for coming over, guys. Again, thank you for watching. Thank you for listening. Go to my YouTube channel, drop a comment, okay? That will be very much appreciated. Thank you, guys. Enjoy the rest of your day, okay? We will kill it tomorrow. Put that down on a sticky note. Bye, guys. Thank you. Take care.